Good afternoon, everyone. Welcome to today's Charity Village webinar. We will just wait a moment for everyone to join the session. Okay, we will get started. Welcome to today's Charity Village webinar. My name is Mercedes, and I'm the Marketing and Communications Specialist with Charity Village. As we are gathering here in a virtual platform, it is important to acknowledge that each of us is joining this webinar from the ancestral or unceded lands of the Inuit, Métis, and First Nation people. As a settler on this land, I'd like to acknowledge that I'm speaking to you from the traditional, ancestral, and unceded territory of the Anishinaabe, which includes the Ojibwe of Fort William First Nation. For those who may be joining a Charity Village webinar for the first time, Charity Village is Canada's largest online job board for the nonprofit sector. In addition to our online job board, organizations can also post volunteer positions. So if you are looking for work or to recruit talent in this sector, Charity Village is a great place to start. We also have a ton of excellent resources for nonprofit professionals, including online courses, articles, fundraising tools, and free webinars like the one we are presenting today. Before we start today's webinar, I would like to quickly run through some housekeeping items. You may have noticed when you joined the webinar that you were automatically put on mute. Since we have hundreds of participants in today's session, it is important for us to minimize the amount of background noise so that everyone can clearly hear the presentation. But you can still ask questions and make comments using the question box at the bottom of the Zoom control panel. Look for that at the bottom of your screen. We will be taking questions at the end of the webinar, so please submit your questions as you think of them, and we will do our best to get to as many as possible. You can also email your questions to webinars@charityvillage.com. If you happen to encounter any technical issues with the webinar, whether with viewing the presentation or with the audio, please let us know in the question box or by sending us an email. We will do our best to get any technical difficulties resolved as quickly as possible, but in a worst case scenario, please remember that we are recording today's webinar and we will send you the full recording by email tomorrow. So if you get called away or disconnected, you will still be able to view the full presentation. And with that, I'd like to welcome our presenters for today, Omar Visram, the co-founder and CEO of Enkel Back Office Solutions, Christine Kessler, the director of the NPO division at Enkel Back Office Solutions, and Shirley Wolf, the senior controller at Enkel Back Office Solutions. Welcome, Omar.
Thank you, Mercedes. Good afternoon, everybody. Good morning to everybody on the West Coast. Just to tell you a little bit about Enkel before we started, I co-founded Enkel in 2016, really with a simple problem in mind, that you can't build a great organization without good books. Fast forward to today, we have about 300 clients. We've worked with over 100 not-for-profit and charitable organizations across the country. We have 80 team members in what we call a global delivery model, and we have a focus on financial operations, not advisory, tax, and assurance work. It's the things that keep your organization working smoothly throughout the year. Enkel would like to acknowledge that our offices are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations. Now to give you a little bit of information on what we do at Enkel. At Enkel, we support the financial operations of our not-for-profit and charitable clients with these 5 services: bookkeeping, payroll, accounts payable, accounts receivable, and controllership services. We're known for bringing consistency and discipline to financial reporting, allowing for improved decision-making on financial matters. We do all of this for fixed, transparent fees that our clients would agree offer great value. Now, before I hand things off to my colleague, Christine, I just want to cover one quick housekeeping item. In the Q&A box, if you do have a question, we may not get an opportunity to respond to all questions. So please just put your email address next to your question and we'll be sure to respond to you after the webinar if we don't get to your question in today's session. Christine, over to you.
Thanks, Omar. All right, so welcome everyone. We're so glad to have you here. I'm going to kick off by mentioning to you our agenda and what we hope that you're going to get out of today's webinar. We're going to talk about the state of the economy, really a pressing topic on everyone's mind. And how do you set up your team for success during this time? Getting started on your 2024 budget, if you haven't already. We're going to offer you some fundraising insights, and we're going to talk about getting the right people on your finance team. Now, this webinar is going to be fairly interactive, as much as some people want to sit back and maybe relax during their lunch hour. We really want to get your opinion. So we're going to have 3 different polls during this webinar, and we really encourage you to get involved. So our first polling question is, on a scale of 1 to 10, how concerned are you about 2024 and its impact on your organization? And we are going to share those results of the poll live. So if you can just think about the coming year. We're getting really close. Can't believe it's about a month to Christmas, and we're getting into the end of the year. How concerned are you about the impacts of this coming year on your particular organization? All right. So I'm actually really thrilled to tell everyone that we've got 100% of people answering this poll, Omar and Shirley. So we've got a great group of people here today that really want to share sort of how concerned they are. Now, what we're looking at is about 51% or 51 people out of 242. So 21% of you are saying 7. That's pretty high. 20% of you are saying 8. And then in the 9 to 10, which is really concerned, we're seeing just under 10% of you. So I would say the majority is sitting around 7 to 8 out of 10. So that's a significant concern going into 2024. So we're just thrilled that you're here to talk about 2024, and hopefully we'll be able to ease some of that for you. I'm going to turn this over right now to Omar, back to Omar, to talk about economic prediction.
Thank you, Christine. So just some trends to start and some predictions going into 2024. So looking at 2024, we expect to see continued high cost of borrowing. We do, taking the prevailing view from economists, it is likely that interest rates will ease in 2024. An article this morning that I was reading, however, from Mark Carney, the former governor of both the Bank of Canada and Bank of England, did note that we should be ready for what he's saying, higher for longer, higher interest rates for a longer period of time. The housing crisis will continue and possibly worsen. Residential vacancy rates of 1% or lower in major cities is a serious concern. We do see governments, provincial and federal government, taking action here, taking measures to increase the supply of housing. Let's keep in mind that these are long-term measures. We won't see an immediate change in 2024. Inflation. Inflation is trending in the right direction. The latest report by Stats Canada does show inflation for the month of October down to 3.1%. This is still far, however, from the inflation target of 2%. GDP growth rate of Canada is set to decrease from 3.7% in 2022 to 1.4% in 2023 and to a further 0.9% in 2024. In terms of political turmoil, definitely some concerns here with the potential to hinder Canada's access to markets, disrupting exports and straining partnerships. We have 2 big wars, the Ukraine and the Middle East. There's tension with major trading partners like India, so potentially some concerns there. Just continuing along with this topic, continued low unemployment rates in major cities in Canada, although we do expect to see softening of that rate in 2024 to pre-pandemic levels, and the softening has already started based on the most recent jobs reports. Increasing global conflicts and potential disruption to supply chain, as I mentioned on the previous slide, due to political uncertainty, conflict with trading partners. And finally, the government's immigration policies will result in increased demand for housing, transportation, and services in major cities. We do see significant immigration to Canada. We have in the past few years. That will definitely continue, and that will have an impact on housing. So how might this impact nonprofits? We should see continued higher than normal demand for services. We do see, and in the 2023 Canada Helps Giving report, I'd suggest that everybody takes a look at that. Decreased donations, higher labor and other operating costs, higher capital project costs, volunteer shortages, stock prices and equity investments will likely be squeezed. All right, let's talk about setting your team up for success.
All right, let's do it. We are considering 2024 and our financial planning. It really is important for you to consider your team as well. You do want to set goals, really clear goals for your team for 2024 and monitor progress. You want to conduct regular check-ins to gather insights into challenges and opportunities. You want to involve your team in developing creative solutions. I find that when a team has buy-in into the process, into solutions, and often your team is really integral in providing the service that your organization is providing. So talking to them about the budget for next year and what they need and what, where we can cut back is really important, rather than doing it from sort of a top-heavy position, can be really useful and beneficial to the entire team. You want to be supportive and flexible in that process as well. So really gather that information and just continue to be supportive during this challenging time. You want to maintain really strong relationships with your external stakeholders, whether that's your donors, your funders, the community. It's really important to maintain those strong relationships. A lot of that relationship building is a trust relationship. So if you're looking for funding or a donation from me, I really want to make sure that the objectives of your organization are clear and that we've built up a trust. So make sure that you're maintaining those strong relationships. So let's talk about this hot topic of budgeting. And I'm going to kick off budgeting with another poll, and I'm looking to you to have your say. Have you started your budgeting process yet for fiscal year ending 2024? And if you're just coming up to a year end, then, let's say your year end was March, have you thought about the following year? So have you started budgeting? It's just a simple yes or no. And it's great to see we have a lot of people getting involved again. It's making me really happy. So Omar and Shirley, most of the people in the room, 65% or so, and please feel free to keep answering, have started their budgeting. But it's not, 90% of people, but it's a strong number, 65%. So that's great. What I'm going to do now is I'm going to turn this over to Shirley, who's going to go a little bit deeper into the budgeting process.
Great. Well, thanks, Christine, and good day, everyone. It's great to have you participating with us today. So as Christine said, we're going to be taking a closer look at the topic of budgets right now. Our intent isn't to give you a lesson on preparing budgets, but hopefully to give you some helpful tips on the do's and don'ts related to your budgets. It's great to see that so many of you are well underway if you haven't actually completed your budget for your next fiscal year. So looking then at the next slide. So firstly, let's just have a quick look at the different types of budgets that may be in place within your organization. And firstly, just what a budget actually is. So it's intended to represent an organization's planned revenues and expenses for a period of time, and that usually coincides with your next fiscal year. And typically you'll be basing on information that's known, such as revenue from an approved grant, or on estimates about what is unknown, but nonetheless what you're planning for, such as a fundraising event. The budgets on the slide represent a tier with program and event and project budgets at the bottom of the tier. And these are important elements of the operational budget, which includes all of the revenues and expenses that you'll expect to see in your statement of operations. The capital budget is separate to the operating budget as it shows the planned outlays to purchase property and equipment such as land, buildings, leasehold improvements, and office and IT equipment. These outlays represent purchases of assets that are recorded in your statement of financial position or your balance sheet. So you can picture the operating and the capital budgets in the middle of the tier, and the master budget will be at the top of the tier as that budget pulls together and aggregates all of the other budgets. So we're now going to look at some of the steps to building a budget. And an important place to start before crunching the numbers is to review your strategic plan and your specific goals for the year, and also those external factors such as the economic environment that Omar spoke about, and any other possible changes in the environment in which you are specifically operating. Strategic plans normally cover a 5-year period, and this is a good time to review what you've accomplished to date and what you're planning to achieve in the coming year. If you don't have a strategic plan, you can nonetheless set goals for the coming year. Budgets are helpful tools to guide an organization in its financial decision-making, so it's important that your budget reflects the plans of the organization and its environment. We're going to talk about some tips for the budget preparation process on the next slide, but before we move on, I'm going to look briefly at the steps you would follow in the budget preparation process. We recommend that budgets go through a careful review process by the finance team, including the program, event, and project budgets. The executive director, the finance committee, and the board will normally want to review the operating and the capital budgets with final approval given by the board. Now is the time to put your budget to use by comparing the actual revenues and expenses to the budget as you progress throughout the year and identifying decisions that may need to be made if there are significant deviations from the budget. So let's get started. I can't underscore enough how important it is to assemble the right people on your budget team. And it's not just your finance team. Those with responsibility for running programs and have other operational responsibilities should be included, as they usually have control over the expenses and are held accountable by senior management. So I'd like to give you an example. A few years ago, I assisted a school prepare their operating budget. And the budget team consisted of the head of school, the principals for a high school and elementary school, various program leads, and department heads such as IT and maintenance. Their input and buy-in into the final budget was essential to the process. The budget timeline is also important to keep in mind, and I recommend working backwards from the board approval date so you know when to start the process and to allow enough time for each step in the process. A best practice is to document the timeline, noting the milestones in this time period and communicating it to the budget team. And this way, everybody can be clear on their responsibilities and deadlines. You may be wondering about tools that are available in preparing and documenting your budget. Many organizations choose to use Excel or Google Sheets, but these can be prone to error, such as formula errors. And it can be time consuming to rework the numbers if there are changes in assumptions. So you may want to think about alternatives such as budgeting software that's available in the market, that will make this much easier for you. Before you start crunching the numbers, we recommend developing some of the key assumptions that you'll be using in your budgets after considering those internal and external factors I previously mentioned, and taking the time to confirm these assumptions with senior management and possibly also the treasurer. This could save you a lot of time by ensuring you're on the right track right from the start. The pre-budget stage is a good time to review your expenses and assess those that are required for the coming year. As another example, I'm on the board of a charity, and we've recently reviewed a particular staff position, which we feel can be downscaled now because of changes in technology. By doing a thorough, honest assessment of expenses, you'll be able to identify opportunities to save costs, as well as realistically estimate expenses in the coming year. After these steps, you and I are in a position to prepare the budget and then move to the review and approval stages. We want to alert you to some common budgeting mistakes. These are pitfalls that you'll want to avoid when you're preparing your budget. It's important to do adequate research, especially when starting a new project or program, so you can get a really good handle on what the actual costs would be. An example is to get solid quotes from a contractor if you're planning any building construction or renovations to your premises. When applying for grants, make sure that you're asking for enough money to cover your program and administrative expenses, or you'll be faced with a shortfall of revenue and will likely need to cut expenses. Also ensure that the budgeted program expenses are in line with the eligible expenses and budgets that are often set out in grant or funding agreements. We also recommend reviewing the actual and budgeted expenses each month to make sure there's no misspending or overspending compared to the budget. Also, managing the expectations of those in management positions can be tricky, as many see the budget time as a good opportunity to ask for those extra nice to haves. So the initial draft budget often needs to be pared down, as it's not possible to accommodate everybody's wishes. At the same time, setting aside monies for unseen expenses is a good idea. And in today's environment, we definitely expect the unexpected to occur. Missed deadlines can result in less time than planned for the budget review process, and this can impact the overall quality of the budget if there isn't enough time to do a thorough review. So we recommend regularly monitoring those budget milestones and timelines to make sure you have enough time for the stage. Dealing with the unknowns in our current environment is often so tricky. It really poses challenges, as many organizations are faced with declining donations and rising costs. To at least maintain your revenues, we encourage you to consider grants that are available that perhaps you haven't previously applied for, as well as innovative fundraising campaigns and maintaining those strong relationships with donors that Christine alluded to. We have included this in the slide, a link to a resource that you might find helpful in exploring possible additional grants that you could apply for. It may also be helpful for you to consider alternative scenarios when preparing your budget by asking yourself the question, what if? So what if donations decline by 10%? What if you're unable to fulfill a position that's important to the delivery of a program? So identifying and quantifying the risks and opportunities your organization is facing can help you to be better prepared for the coming year. When you think of budgeting, you may want to think of items that are going to impact your cash flows that are unrelated to your income and expenses. So the budgets that we've spoken about are normally prepared on an accrual basis. So they'll include non-cash items such as depreciation of property and equipment. And many organizations find it beneficial to prepare a cash budget that considers those cash flows outside of the revenues and expenses, such as your investing and your financing activities. A common example of this coming up for 2024 is the repayment of the CEBA loans that most organizations will be making in January, or if they're able to apply for an extension before the end of March. And cash budgets are strongly encouraged, especially if you're cash constrained and need to manage your cash flows carefully. I'm now going to hand over to Christine, who's going to talk to us about fundraising.
Thank you, Shirley. That was a fantastic overview of budgeting. So let's talk about fundraising, and I need your help again. We're going to launch our third and last poll. Have you started to see declines in donations? And I mean, it's a pretty telling question, especially coming off of COVID. In general, I think there's a lot of just apprehension about where we're putting our money. And I know years ago, when I was an executive director of a charity, there were some donations that we felt were solid. You know, they were just in perpetuity. It felt like the same donors were giving every year. You could count on a certain budget line. Some of it was unknown for sure, but I think there was just a level of donations that you could feel confident in budgeting that likely no longer exists. I mean, not to say that there aren't some donors that are still very, very tied and very loyal and have not changed in their giving. I think just the economic, the way that the economy has changed that. So it makes budgeting tougher. So we're seeing about 68% of people saying they've seen a decline in donations, and that's to be expected. So when we're looking at different forms of revenue, we do look at fundraising as well. So I'm going to talk to you a little bit about that. You can expect and plan again for another down year. Know who you are targeting and focus your marketing efforts. So really thinking about your demographic. And I think a lot of it has to do with just really being open and flexible to what is relevant today. You know, many years ago, marketing on social media was non-existent. Now, a nonprofit that doesn't have a social media presence is missing out often. So really just being flexible and understanding who's your demographic that is supporting your mission. Be clear on what resources are required to execute what you're planning. When we used to plan fundraising events at the agency that I worked for, sometimes it was just a split between, you know, what do we need to raise in donations and what items do we need donated? Do we need the space donated? Kind of really think about that budgeting process and planning around what are the realistic resources we need to execute this plan. Think outside the box. So that goes back to my point about what was relevant 10 years ago in fundraising is likely not relevant today. So we had a set of fundraisers that, you know, that golf tournament, we actually did mailings, and, you know, there's a lot of that shifting to different types of fundraising. A lot of it's online. A lot of it, again, is hitting a different demographic. Think about matching gifts. That can be a fantastic campaign. Create a challenge campaign on social media. You know, there's a lot of conversations we have around the, you know, water cooler about things that we see on TikTok or online, like the ice bucket challenge. And a lot of nonprofits really got into that as well. So think about different campaigns that you might run that might get you traction online. The great thing about that is it can be national, it can be global. You can really raise awareness on a much bigger scale a lot quicker than years ago when we were reaching people through what we consider snail mail. So partner with influencers and celebrities. set up a Facebook fundraising campaign. Consider digital advertising. Again, this is where it's not even where we're headed. I think I would be remiss to say this is where we're headed. It's where we are and where we've been for a while. So raise more than just money. You might need to have a volunteer campaign. You might need to have a campaign where you're asking people to donate space or donate items rather than just money. And I think, again, at a time where people are more and more conservative about where they're putting their money, they might find it easier to give their time right now. And volunteer hours really add up, especially in a fundraiser or just in your organization. Sell what people want to buy. That is the key. So if you're sort of stuck in well, this is how we've always done it, that only goes so far. We are rapidly changing. And I think COVID really changed a lot of what we do for fundraising as well. It's not as much of going in person to things. There's a lot of online options, et cetera. And embrace and use social media. As tough as that is sometimes, it really is where people are going. And make it easy for people to donate. So we have a lot of clients where we're looking at their revenue streams, and there's sometimes we'll see that they don't even have a donate button on their website. So if you're sitting here and you don't have a donate button on your website, I would encourage you to start there. Get people access to not just the information about your agency, but really give them a lot of different options on how to give, whether that's, I just want to volunteer, I want to donate on your website, I want to come in, make that really accessible. It's really important in our planning for 2024 because we're continuing to move in that direction. I'm going to turn this over now to Omar, who's going to talk about building a rock solid finance team. Say more, Omar.
Thank you, Christine. All right. Let's jump in here. So finance is a team sport. This is something that I've learned in my career, that really it is all about the people that you bring onto the team. Of course, in every not-for-profit organization, there are some critical roles. There's the executive director, program managers, finance committee, hopefully a treasurer in the organization. A question going into 2024 is to hire or to outsource. 2024 is the year when you want to make sure that you can be flexible. Also, just given the environment, you want to make sure that you're bringing greater rigor to budget versus actual reporting with timely monthly results. If you're not getting the results you need, consider outsourcing your finance function, all or part of it. If your annual operating budget is less than $10 million a year, there are some team structures that we have seen work that we consider to be best practices. And keep in mind that if you have a dependency on a volunteer bookkeeper or treasurer doing the books, this is likely an unsustainable way of getting your books done. So in terms of what we've seen work, and again, these are averages, these are sort of generalizations. And so keep in mind that every organization is different, and there may be reasons why these rules, so to speak, don't apply to your organization. But organizations with an annual operating budget of less than $1 million, typically can outsource their bookkeeping function, with finance coordination held by the executive director or an administrative team member. Getting into the $1 to $5 million annual operating budget, to a large extent, it looks the same. That said, there usually is an outsourced fractional controller or CFO. At this point, the financial reporting can have a few more layers of complexity, and it often makes sense to have a senior finance professional with experience overseeing the bookkeeping function to make sure that the results are accurate and delivering on what the organization needs. As the organization gets larger in the $5 to $7 million range, typically we see the outsourced bookkeeping function continuing with an outsourced fractional controller or CFO. But at this point, there's usually an internal finance coordinator, somebody who has some finance experience, works with the bookkeeper and the controller, but can liaise internally with the organization and who has an understanding of finance. Now, getting into an organization with $7 million plus in annual operating budget, typically you'll see more internal functions in an organization of this size, an internal director of finance or CFO, an internal finance coordinator. But what we often see in these situations is that certain processes are outsourced or remain outsourced with a third party. Processes such as payroll, accounts payable, processing, etc. Are you rethinking your financial operations for 2024? This is usually a time of year when we're having a lot of conversations about what things will look like going into the next year. Feel free to book me for a consultation. I'd be happy to help you understand what opportunities you might have for improvement in 2024 on the finance and accounting side of your organization. We're now going to go into some questions, question and answer period. I do see that a lot of great questions have been coming in. Please continue to send them through and we will begin answering them.
Great. Well, thanks. I think I'll jump in with the first question. So this particular participant has asked how you would record items donated for contents for a raffle basket, and also for donations of gift certificates given to volunteers or for marketing promotions. So I'll perhaps answer the one on the gift certificate first. So the gift certificate is regarded as being a money equivalent. And so when you receive those gift certificates, you're going to record the donation income. And then you need to just think about whether that gift certificate has been used or not. If it's been used, then you'd record it in an expense account. And if it hasn't been used, you would record it in an inventory account for gift certificates on your balance sheet. And then, of course, when it does get used in the future, you'll take it out of inventory and record it as an expense. Now, coming to the donation of the raffle basket items, that will depend on what your accounting policy is for recording donations of materials and services. So you have an accounting policy choice. It's one that you've likely already made if you have a set of audited or reviewed financial statements. So check your accounting policy there. If your accounting policy is not to record these items, then you won't do anything. But if it is to record those items, then what you'll do again is record the donation revenue for the value of those items in the basket, and then you'll record an equivalent expense.
Great. Shirley, I'm going to actually put another question to you that I noticed here. And we were asked this at the last webinar too. So I really think this is a common question. So people want to know, how much should we budget for emergencies / rainy days? Is a reserve fund enough? Is a reserve fund the same thing? That's what they're wondering.
Right. And so it could actually be different to your reserve fund. So you may have an approved reserve fund that's being set up, and maybe you do want to just assess the adequacy of that reserve fund and whether there's a need to perhaps increase it because of the ongoing uncertainty that we have at the moment. But as you do the scenario analyses that I mentioned, and maybe an example I can give you is an experience I had again with that school budget, where parental leaves for teachers were actually really important. And of course, that was a big unknown, trying to estimate the number of people who might be going on parental leave for the budget period. And so what we did is we looked at what we knew, but we also looked back at historical trends to see on average how many people would take leave in a particular year. But having considered that, we also looked at the maximum amount of leave that had been taken in any 1 year, looking back over the last, say, 5 years or so. So instead of perhaps going with an average cost for your budget, what you may want to think about is, should you maybe be more towards the upper end of the scale? So when you look at your various scenario analyses, you may want to perhaps err on the side of caution and take a more cautious approach, shall we say, in preparing your budget. But that will really just depend on your particular circumstances. And I think after giving it careful consideration by yourselves and by your board as well.
It's great. One of the questions we were asked is, do we do forecasting? And I can answer that. We absolutely do. So at Enkel, we have a bookkeeping team and a controllership team, and we do month-to-month forecasting and budgeting with our clients on a monthly basis or as needed. So that is definitely something we do. We do have a couple of questions, Omar, about budgeting software. So one of them is asking directly if you know of budgeting software that integrates well with QBO. And then another one is just, do you have some advice on budgeting software? So over to you, Omar.
Absolutely. So first and foremost, I would say, don't use a tool thinking that it will solve all of your problems. That's especially the case with budgeting. First and foremost, you need to make sure that your bookkeeping is getting done on time, that it's in high quality. Because without that, any budget versus actual comparisons that you're doing are not going to be meaningful. Secondary item is to make sure that you're budgeting at the chart of accounts level. That way you can actually get your budget loaded inside of QuickBooks, and every month you can measure budget versus actuals. Now, if you want to take it one step further, there is a tool on the market that you might want to look at called Fathom. It seems to be the leader in budgeting software. It's one that I've played with a little bit. But again, if you get the basics, if you get your budget inside of QuickBooks and you're reporting accurately and on time every month, that might be sufficient.
Great. There is one question about partnering with a celebrity or an influencer. The question is, should there be an expectation that they get paid? I think that's on a case-by-case basis. I think if I was approaching a celebrity or an influencer, I would definitely put on the table that, because they're likely going to have a fee, that they could always donate the fee back to the organization for charitable receipt. So it's a cash donation, or you may have to pay a fee, but it's more about the exposure. So just that traction and exposure that you can get from someone that has, 15 million followers type thing. But that would be a case-by-case basis. That would be tough to gauge, but I would assume that there would be some sort of benefit to that influencer as well. Okay. Should a reserve fund include 3 to 6 months of operating costs? That is best practice. Shirley, did you want to take that a little bit further? It's back to those reserve funds. So we do usually say 6 months, right? Especially in this day and time, you want to have as much reserve as possible. Would you agree?
I think that's a good approach to take. I know, again, a charity that we're on the board of, we're also monitoring our cash balances as well, and making sure that we are also maintaining that approximately 3 to 6 month range of operating cash flows in our bank account. So yes, one can approach it in different ways, but that sounds like a good idea to me.
Now, this is a really good one, and I think I've hit another hot topic here. And Shirley is our senior controller at Enkel, so she does a lot of work with our nonprofits that are doing grants, grant applications, and really reconciling that to their budgets. And this hot topic is, how can we negotiate with government funders, which is a tough thing, with admin costs. So really the
Mhm.
questions, and I've seen a couple of questions in the feed where admin costs are being cut, the cost of admin is going up.
Mhm.
So how do they sort of maintain some sort of a tighter expenditure for admin costs while not being funded for it? So do you have any suggestions or advice, Shirley, for agencies that are just really struggling with that? And I think it's really common. I've heard it from our clients quite a bit.
Mhm. Yeah, that's a really good point that's been raised, and I don't know that I necessarily have the silver bullet here, but I think again, so much comes down to maintaining really good relationships. And perhaps again, I can just cite an instance of a board that I'm involved in where our executive director has very, very close relationships with two governments, two provincial governments that we receive funding from. And having those open channels of communication and really being able to explain the challenges that you're facing. And no doubt governments and other funding organizations are well aware of the cost pressures that not-for-profits have been under in the last couple of years, really. But being able to explain your position and why you're needing the funding that you are, I think would be extremely helpful. Now, you may nonetheless not be able to get the level of funding that you need, and that again comes down to looking at what your plan B may be, and that may be to sort of launch a fundraising campaign or really seek out other sources of revenues to help you cover your costs, and as well, of course, looking at your costs carefully to see where you can be saving money.
Now, someone raised a good point. Someone had said we should revisit partnering with sporting events. I think that's a fantastic idea as well. So I think it's great that they're raising that to everyone in the room, over 300 people, to say, think about that as well. We do have a compliance question, Shirley. Do Canadian charities have to report their events revenue on a separate line on their financials?
They do not. No, they do not. So having said that, I know that if you do go ahead and present fundraising revenues and expenses, you need to do it on what we call a gross basis. So your expenses need to be in the expenses section, your revenues need to be in the revenue section. But I don't believe there's a requirement that these have to be separately on separate lines within your revenues and expenses. But you know what? I will double check that. And when we get back to you with the answers to these questions, I'll make sure that I include that there.
That's a good segue into just reminding people to leave their email address with their question. If we don't get to your question today, we will be emailing you with an answer to your question. We do review that. We have an excellent marketing team that is going to be on top of that. One of the questions is, how do we record in-kind donations that were not tax receipted? Now, I would record those in the same way on your books as a donation and an expense. Shirley, I'm guessing that you're nodding. Yep.
Exactly. And again, I think it comes back to your accounting policy for those donated materials and services. So look first at your accounting policy. And in fact, even if your accounting policy is to recognize them, there are still some additional criteria that have to be met before you can actually record that on the books.
And there's another question about upcoming audit changes. So we're not hearing anything for the coming year that there would be audit standard changes. Surely you haven't heard anything on that's correct, right?
So there's very little already that's changing on the audit from the perspective of the auditing standards this year. We did see some changes come into place for previous year's audits. So for the 2023 audits, essentially requiring auditors to do a more rigorous risk assessment. And those changes, of course, carry forward. You know, the standard is in place and they have to continue to meet those requirements as they conduct audits. But there's really very little that's new this year.
This is a question that I think Omar might take. should outsourcing considerations take into account, it says how complexity of funding agreements. So I'm guessing the complexity of funding agreements. Should outsourcing considerations take into account how complex some of that is?
Yeah, I think that is, if I understand the question correctly, that is sort of drawing into, making sure you have the right partner, a trusted partner that really understands not-for-profit accounting and perhaps how your organization works. So I think it comes down to, whether it's an internal person or an external party, do they have the technical capabilities to address your needs?
Now, one of the questions is around HST, and we do always preface by saying we're not tax specialists. This is asking what is the HST recoverable for registered charities. That does vary actually province to province. I'm in Ontario, Shirley and Omar are in British Columbia. And if you are a charity in either of those provinces, your recoverable is going to be different. Typically, it's half of your GST, but in some provinces, you can recoup a good portion of the provincial portion of HST like we do here in Ontario. So it's always best to check with your bookkeeper and your accounting firm to really, and again, if you're a nonprofit and not a charity, the rules are different again. Often it just depends on the operations of your agency. But for charities, it's typically half of the federal portion, because this question was specifically around HST, and I don't know what province you're in. There is HST in several provinces in Canada, but in Ontario, where I am, it is 50% of the federal portion, which is the 5% of the HST, and then 82% of the provincial portion. And again, that's going to vary from province to province. So because we reach people through Charity Village right across Canada and maybe even outside of Canada, I'm not sure where in Canada you are, but I hope that answers your question. Let's just see here. Can part of the unrestricted revenue be allocated to reserves? Would you suggest a separate bank account for reserves?
Okay.
Shirley, do you have any insights on that?
Well, my answer would be a resounding no. So your deferred revenues or your deferred contributions are externally restricted monies. So it could be a grant towards a specific program. And so you have to spend the monies on that program. You cannot use it for a reserve that may cover sort of emergency unforeseen expenses that would be unrelated to that program.
Excellent. Let's see. Does anyone else see any questions that you'd like to answer? Do you have any suggestions? And actually, this would be an Omar question. We'd love to hear from Omar. Do you have any suggestions on automating the AP function? It takes up a bulk of my finance team's time in paying and reconciling. This is a great Omar question. It's a lot of what we do.
Yes, great question. There are a couple of tools that we use at Enkel for expense automation and AP automation. Dext is on the expense automation side, and Pluto is on the AP payment automation side. So the great thing about Pluto is you can route payments to the appropriate approver. If, for instance, let's say that everything over $5,000 needs to be approved by the treasurer. Everything under 5,000 will first go, say, to the ED. Everything over 5,000 will go to both the ED and the treasurer. And only once the electronic approvals from both have been received will the funds actually be released. There is, I was actually just looking at this yesterday, also an audit log within Pluto. So your auditors will be happy because it'll show, the way that the approvals or the way that the money was approved before it was dispersed. Thank you, Christine.
Yeah, and I think we're just going to end with this question here, and I'll put it back to Shirley. People are wondering your restricted funds. Is it okay to put those in a GIC or an investment to earn interest while it's off to the side before you recognize it?
I would say yes, but you do want to keep in mind the terms of your funding agreement, because that agreement may specify that if you do earn interest on those monies, that you need to direct them towards the program. So you wouldn't be able to necessarily use them to pay for other administrative costs.
Awesome. All right.
Great. Well, thank you so much for presenting such an informative webinar. Do you happen to have any final comments before we sign off today, Omar?
No, just in general, please do feel free to visit us at enkel.ca. We're very proud of our library of resources for NPOs. There's hundreds of great pieces of content that are available there for you. And please also feel free to send me a note if you'd like to connect. Finally, a thank you to Charity Village, our partners. And also, this will be the last webinar for Enkel for the 2023 year. So we wish you all the best this holiday season. Thank you, everyone.
Thank you so much, everyone. And also, we included a link to download Enkel's free Importance of Internal Financial Controls guide. That's just in the chat, and we will also include it in the follow-up email tomorrow as well. And I just wanted to remind everyone that you will receive that follow-up email tomorrow at 1 p.m. EST. It will include a link to the webinar recording as well and the slide deck. So please feel free to share that with your colleagues. And then also we will be including the follow-up survey, which will also pop up here in Zoom following the session as well. On behalf of Charity Village, thank you so much for joining us today. I hope you'll join us for our next free webinar, OHSA and AODA Compliance Responsibilities for Nonprofits. You can find more information on this and all of our upcoming webinars at charityvillage.com/webinars. Thanks again for joining us today. Enjoy the rest of your day.